Good evening, everybody. I was just trying to give some time for the rest to come. I know it's traffic, it's the unusual day that we meet. Okay, so welcome. I hope some of you had something to eat. I saw somebody and I also got something to eat. All right, so I know you all come from work, so welcome to class. What's happening now? Okay, what do we do tonight? We go to sleep. What do you think, yeah? It's a good idea. All right, listen, I'm going to go straight to chapter 7, okay? Because we need to understand this part. Because once you understand this part, it's very easy to understand substantive procedure. Okay? Now, so we're going to talk about this and also we will do some exercises on how to answer an exam type question. Okay? Now, note for everyone, okay, the answers to Mila Company. Remember we worked on Mila Company? Okay, will be with this OneNote. Okay, so this OneNote I will send you tonight. You'll have the answers to the Mila Company. I had trouble with my computer today, so for those who send their answers to me in the Google Classroom, I will see them eventually tonight, hopefully. All right, but some of you I sent you the comments. Have you read my comments? Whoever sent me a reply, I replied back. Okay, so also I have posted on the Google Classroom. In the Google Classroom, I have posted your homework. You remember what your homework is? It's the company code Eagle Company, remember? Yes? Okay, so it's there and I put a deadline and the deadline is on 8th of September. Okay? 8th of September by midnight of 8th of September. So you can send me anytime, okay, until then. So that is our plan for today. So if you please, can you open your lecture notes to chapter 7? Chapter 7. Chapter 7, chapter 8. Oh, I'm mistaken. Sorry guys. Chapter 7, it's chapter 8. Sorry, wrong one. Chapter 8. Okay. Okay. All right, so audit evidences and financial statement assertions. Listen, the following are the things we need to learn in this chapter. Okay, number one, we will talk about what we've been saying all along, assertions. What does it mean? What are assertions? Okay, and there are assertions in the classes of transactions, okay, events and disclosures, account balances and their disclosures. What am I talking about? When I say transactions, I mean to say income statement related information. Do you understand? Transactions means sales. Transactions means expenses. Okay? Account balances, on the other hand, are the ones that are found in the balance sheet. Okay? And of course, disclosures are the ones that are found in the notes to, okay, the FS. Alright? So, what are assertions? We need to be able to explain that. And then, we need to find audit evidences to prove the assertions. And how do we do that? We have to apply audit procedure. Okay? So we will briefly discuss these things. So what are the three things we need to actually, and of course the last thing is, how do you know if that evidence is sufficient and appropriate? Okay? So, in other words, sufficiency means quantity. Sufficient and, what do we say? Appropriate. So when I talk about quality of the audit, I'm talking about that it is appropriate. So we need to know what does it mean. Okay? Alright? So, and also, how do we get to rely on an audit evidence? When we say the audit evidence has to be reliable, what does it mean? Okay. So, these are the main things we need to learn from here. Okay, assertions, the audit evidence to prove an assertion, and what procedures we need to do to get the audit evidence. Right? And when we talk about evidence, what is acceptable as an evidence? Okay, in terms of quantity and quality. Alright, so here is the main things we need to talk about. Okay, financial statement assertions, the procedure to get the evidence to prove the assertion, the quality of the evidence, and of course we need to differentiate between test of controls and substantive tests, okay, or substantive procedure. Alright, so we will talk all of these. These are all the procedures. Okay, these are all the procedures. But the same procedure you can use to test the controls, and the same procedure you're going to do to get evidences. Okay, but the purpose of the two of them are different. Alright, so again, we saw this again. Tonight, we don't talk about this. Last night we were talking about up here, correct? Okay. So now we're going to talk about this. How do we test controls? How do we get the evidences? Okay? So, right, so this is where we are in our audit, okay, process. Now, time and again, we say we need to have audit evidences so that we can form an opinion. Okay? Form an opinion on the financial statements. Okay? Now, the question is, in or out? Again? Okay? Because the mirror outside is the mirror, correct? So it mirrors the sky. So the bird thinks that it's part of the sky. Oh, we are killing the birds. Oh my God. Yeah, some poor bird. Okay. Anyway, so we need to design and do the audit procedure so that we can get the evidence. Okay? Now, this is where we are going to be tested by the examiner. Because they will ask you to give the audit procedure, and it must be the correct audit procedure that applies to the accounts, applies to the transaction. Okay? So this is what we're going to need to learn to do. Now, the audit evidence has to be two things. And you always hear these words. What are these words? Sufficient and appropriate. How can an evidence be sufficient and appropriate? You are my what student? You are my FMA student. Correct? Yes? Yes? This class is my audit class. We don't have a class today. We had a class yesterday, not today. Okay? Unless you want to listen to my audit and assurance class, you are welcome. But if not, you're free to go and watch a movie. Yes? You understand? You want to stay? You want to listen to me? Okay, good. Alright, thank you. Thank you for keeping us company. Alright. Tonight is supposed to be their night, not our night. Okay? But I switched it off because I need to meet you before we talk. We need to talk more about evidences first. Okay? Before I leave you for 2 weeks. Alright, so let us now look. How can an evidence be sufficient? And how can the evidence be sufficient? Appropriate. Sufficiency refers to quantity. Okay? Now, quantity here means, okay? Quantity here means not the number of samples. No. But where do we find proof? In other words, you have many proof. Understand? Okay? So, in other words, how do I, let's say cash. Cash is something that all of us understand, correct? So how do I get proof that the cash is correctly stated in the financial statement? So one way is for me to do a cash count, correct? Okay. Cash count. Alright. So that's one proof. Now I'm still not satisfied. I want more. Why do I want more? Because, what do you think? What did we say? I want more evidences because what was in my plan? Remember we talked about planning? Yes? What happened in my plan? Why do I want more evidences on my cash? Because is what? When I was planning, when I was assessing the risks, I noted that this company, because of the nature of the business, they have lots of cash. It's a supermarket. Understand? Because they don't have enough controls, I saw that their cash can be misstated. There is a high possibility that it is misstated, correct? So, just the cash count is not enough for me. So, I need to do another procedure. Understand? So, probably I have to match. Maybe I will get daily intake of cash and I will match it with, I will do a check. The cash from the till roll of the supermarket, and I will match with the cash that they receive. You understand? So I need more evidences because when I was doing the assessment, do you see this? When I was doing the assessment, I saw that the risk of material misstatement is high. So I need more evidences. Do you understand? Okay? Alright, so, and what kind of evidence? Now we've talked about how many. Now what kind? It has to be quality evidence. Now how? When we say quality, means it is appropriate. So what exactly are we looking at in terms of quality? There are two words when it's attached to quality. Two words. Relevance and reliability. Relevance and reliability. Okay? Now, let's take the first word, relevance. Relevance means that the evidence I have matches the assertion. What does it say here? The evidence I have, it matches the assertion under consideration. Alright, let me tell you. I am auditing the vehicles of a company. You know vehicles, right? So in the balance sheet, I saw motor vehicles. Okay? Now, if the company puts the vehicles in the balance sheet, it means what? Tell me. If the company puts vehicles, 3 cars, 2 trucks, it means that, yeah, it's an asset. It means also, what does it mean? They put 3 cars, the value of 3 cars, and 2 trucks. So if they wrote it in their balance sheet, it means it belongs to the company. Is that correct?
Yes.
Alright. Means they own the trucks and the 3 cars. Okay? Now, we will go to assertion in a moment. Ownership is one of the assertions of the financial statements. Means that if I put something on my financial statement, I say there, this is the cash, this is the receivable, these are the motor vehicles. It means it belongs to the company. Ownership. Okay? So assertion means that is what the financial statement is trying to tell you. To assert means to say. To assert means to tell. Yes? Now, assertion is that when I receive financial statement of ABC company, and it says there that 3 cars and 2 trucks worth 2 million total, okay, is there in the financial statement. So, which means, number 1, they own them. Because it's there, right? I cannot put my personal car there because it's not belonging to the company, right? Now, let's go back. Relevance. Tell me, I am the auditor now. I want to prove ownership. I want to prove ownership. Tell me, what proof should I look for? I want to prove assertion because ownership, because that's what it says. One of the things that is asserted in the financial statement is that these cars are owned by the company. Now, in the balance sheet, you don't see those words, right? You don't see there, the following are owned by ABC company. No, right? You don't see. You only see what? You see property, plant, and equipment, and under that, you will see motor vehicles. Correct? But when they write it there, they want to assert that those belong to them, to the company. Now tell me, what proof should I get? Now I am the auditor. I have to prove that this company owns these cars. What should I do? What do you want me to look for? Yes, you want me to inspect a supporting document. What document? Okay, I can look at purchases invoice. For example, if they just bought it now, correct? This year. Because the purchase invoice will say, sold to ABC company, from Nissan company. Sold to ABC company from BMW, correct? Correct. Anything else? What else do I check? What else do I inspect? How else can I know it belongs to the company? Yeah, which is what? What do you call it? Okay, he wants it out. Oh, you don't know in English. It's the motor registration documents. Registration documents, correct? Is that what you mean? Okay, you have to teach me that camera word. Okay, you understand? So I need to inspect that the motor vehicle registration is in the name of ABC. Now I get those, which means that is my procedure now. What is my procedure? My procedure is two things already I did. Number one, I inspected purchases document. Can I do that? Is that a proof? Yes. Oh, and the other one, I need to get registration document, right? Now, can I just get one proof? Yes, if it's not risky, right? But if I'm not very sure, then I get two. I check two evidences. Do you understand now? Okay, sufficiency. Now, is it relevant to the ownership assertion? These two proof? Yes, then it is appropriate. You understand? It is appropriate. Now, the other word is reliability. In other words, where did I get the information? Okay? Now, imagine this. Imagine this. I would ask, for example, to the company, sir, these 3 cars and two trucks. ABC company owns this. Now what is my procedure? I'm asking, correct? An inquiry is also a procedure. Is also an audit procedure. Then he tells me, yes ma'am, it is belonging to the company. Okay? Is the registration in the company name? He said, yes, it is. Tell me. Which is more reliable? Him telling me by word? Yes? Or me reading the purchase order and taking notes and reading the motor vehicle and take notes that I saw and its original registration, the original invoice, yes? Which is more reliable evidence? The document that I saw? Or he said, yes, madam, it belongs to ABC. Which one? You understand? Okay? So reliability is, okay, where did you get it and what and the type of the how you got it, okay? Where you get it and how you got it. So that is reliability, and relevance means it matches the assertion. Okay? It matches the assertion. Now, you remember those 2 documents I see? Another thing that you prove in the motor vehicle is that 2 million, you remember how much they put in the balance sheet? It says 2 million, correct? Okay, now I want to prove correct valuation. Which of the 2 evidences I can use to prove valuation, the value of the car? The purchase invoice checking or the motor vehicle registration? Which one? The purchase invoice. Which means this evidence of purchase invoice is relevant to what? It's relevant to the valuation assertion, at the same time the ownership assertion, but the motor vehicle registration is relevant only to the what? Ownership, but not the valuation assertion. Do you understand? Yes? So it has to be relevant to the assertion. Now why did I say that? Because in the exam, the examiner can do 2 things. The examiner can say, for example, motor vehicle, give me the audit procedure. Oh, you can list all your audit procedure, correct? But sometimes the examiner will say, okay, give me the evidences to prove ownership. Now, do not tell me about, evaluation. Don't tell me about registration when they're asking
valuation. You understand? Because that answer would be wrong. You got it? But if it says, give me proof for ownership, if you wrote the two, is okay? Yes. If you wrote only the purchase invoice, yes. You understand now? Okay? So it is important that we learn about assertion and we learn about procedure to be able to get the evidence to prove an assertion. Okay? Believe me, if you understand this part, when we talk about every account in the next chapters, it's very easy to think about what procedure to answer. Okay? What substantive procedure to prove an assertion. By the way, this type of question always comes out. Similar to the audit risk. The audit risk I was telling you, okay? We are practicing, that always comes out. This one too. Because this is the main skill that the examiner would like to make sure that you have as an auditor, okay? Or as an ACCA. Okay. All right. Here's more of our how we can prove reliability. Okay. Now, external. Which one do you think is more reliable? The documents I get. Now, I am the auditor. Huh? We are the auditor. We are the auditors. Which one do you think is more reliable? The one that I get from a third party or the one I get from the company? Third party, you understand? So, the proof that I get, for example, of bank balances, of course, the accountant will give it to me of the ABC company. But, of course, that it's an information. But the one that's more reliable is I go to the bank itself, right? And I get the bank to tell me the balances and every other detail. You understand? That is more reliable. External versus internal. Now, sometimes the auditor does the calculation. You understand? What does the auditor do? Sometimes the auditor they do bank reconciliation themselves. You understand? Okay. So which one would you? Which is more reliable? The bank reconciliation that is done by the auditor, or the one that was done by the accountant a month ago? You understand? Okay, because unless you don't trust yourself, isn't it? Okay? If you don't trust yourself, then you better get the one from the accountant, isn't it? But of course, you're trained to be able to work that out. Okay? Okay? Now, what if the information I get is from the company? Do I rely on it? Depends. And it depends on what? It depends on what? Remember, I can get some proof from the accounting system of the company. That is also proof, right? But I can rely on it more. It's more reliable if the company has a very good internal control system. Do you understand? Yes? Because the internal control is supposed to, it's like in your house you have this, it's called a strainer. It's like, I'm not sure what is in Kamai. It's like a basket like this, and it has holes. You understand? And you put something on top, and you do this, and it falls down, right? Yes? Now, what happens to internal control systems is that internal control is, imagine the flour or the rice that you put on top are all the transactions, correct? Okay. So when you do this, the internal control is supposed to make sure that what comes out, okay, are the ones that passes through control systems. You understand? It actually checks the misstatements. So if the misstatements are not, the transaction is a misstatement, it will not go through. You understand? So only the ones that are going good, they go through. So if the company does not have a good internal control, what happens? Even the misstatements are recorded in the financial statements. So if the company has, guys, do you understand what I'm talking about? The girls are the ones saying yes, yeah? Yeah, but you know, your mother, did you watch your mother do something in the house? Yeah? So they actually try to, in English it's called sift, it's like when you make cake and it falls from the, okay? So if the internal control is not good and the holes are big, then even the misstatement is recorded in the accounting system. But if you have a good internal control, all the transactions are correctly recorded. So which means, can you rely on what is in the accounting system? Yes. Because some evidence, you get it from the entity. Yeah? Written or verbal? Of course, written. You understand? Okay? Written. Original or copy? Fax? No. Email? Because fax disappears, right? I don't know if somebody still uses fax nowadays. Emails, by the way. Acceptable or not?
The last choice.
It depends also, no? And also the last choice. It depends. If the email comes from a yahoo.com or gmail.com, maybe I don't rely too much, correct? But if it comes from a company intranet, in other words, for example, accounting.manulife.com, will I accept? Yes, you understand? It is from their intranet. Because even the court, the court, the judicial court, nowadays they accept evidences, email evidences, but depends where they come from, okay? How it's been transmitted, okay? Alright, so originals or photocopy, of course, originals are, okay. I have one more. Which one would you accept more? Which one is more reliable? If a document is sent to you directly, or the document came to your client before the client gave it to me. Which one is more reliable? It's the same document, huh? For example, the supplier sent a statement. Yes? Now the supplier sent it to the client, and then I got a copy. Or the supplier, I asked him to send it to me. So which one do you think is reliable? The one that he sent it to me. You understand? Okay. So reliability are all these, huh? Okay. Right? So okay. Let's see. The following are some evidences that you've seen. What do you think about them? Do you think they are sufficient and appropriate? Okay, let's take a look at. Okay, can you mark them? Can you rank them? Which one would be the most reliable and the least reliable? Can you take a look? Which one in your point of view is the most reliable and the least reliable? Okay, so it's not very nice, all of them, right? But which one would you be the number one proof that you think in terms of reliability? Which one? A or B? The written statement from the customer? Yes? Okay, we'll put that as 1. Alright. Alright. Next one? Okay, I'll take this. Remember, I prepared it myself, right? Okay. What's the third one?
A. B. D.
Okay, so I'll take this and then I'll take this, correct? You understand? Okay. Because, alright, so here, now, you know why number one is the written communication, right? Why is it written? Why is number one? Because it's written, probably it's direct, right? And it's third party, correct, information. I chose number two, this one. Why is it? Because the auditor has prepared it himself, correct? Okay. Although it's not been reviewed yet, but I'm sure we trust it would be better if it's the reviewed one, okay? Now, between 3 and 4, why did I choose 3, the one here, rather than the one on the finance director? Why did you choose the last one as number 3? It's number 3, number 4, because it's verbal, right? And the finance controller, okay, has direct control over the preparation of the financial statement. So he knows what he's talking about, right? Okay. Now, number 4, again, it's last one because it's verbal. Now, finance director says the company is a going concern. But what about the CEO? You understand? It's the CEO maybe knows something else that the finance director doesn't know. You understand? And going concern, okay? Going concern, we can find other proof for going concern. And we're going to talk about that when we talk about going concern towards the chapter at the end. Okay? There are many other proofs to prove going concern. So that I put last. You got it? So. Okay. Alright, now, what is the requirement here? Okay. Alright, so the question here is, in relation to claim regarding alleged food poisoning, which of the following audit procedures you would provide the auditor with the most reliable audit evidence regarding the likely outcome of the litigation? What are they talking about? There's something alleged food poisoning. Can you see what happened? Can you read very quickly so you can tell me which one is the best evidence of what they're asking for? Okay, so what happened? Who is the hotel? Balotelli Hotel, correct? What happened to Balotelli Hotel? Okay, so there was an event and people got food poisoning, correct? So now these people are what? Are suing them, correct? Yeah, they're suing the hotel. Alright, so what are we supposed to do? Now remember, if some people are suing the company, is it something that affects the financial statement? Yeah, what is it called? It can either be provision, which is a liability, or a contingency, correct? Okay. Again, we will talk about provision and contingency in one chapter, right? But, so there is something, it affects the financial statement. So, now remember, we are now going to get evidence. We need an evidence. Because the company is saying, no, 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 they're not doing this case. Okay? But we need to get evidence if the litigation will come through. In other words, the lawsuit, the lawsuit will happen and they will claim from the company. You understand? Okay? So, which one of the four is the most reliable audit evidence? Okay? Have you read all the four? Not yet.
Yes.
Yes? Okay, good. So tell me, which evidence?
B. B.
C?
B. B.
How many says A? Anybody A? No? B. Very good. C? C. Good. D? Okay. Answer. The answer is B. Why B? Okay. For sure A, look at A. A written representation. You remember what written representation means? We get the company to write down, right? And then they sign. Okay? So what do they say? Oh, no, they will not claim, and they sign. Is that proof enough that they will not claim? No. Okay? What is best is for you to ask, send a letter to the lawyers, because the lawyers know how the case is going, correct? And they will know if the people are going to claim an amount of money. Because if they do, we need to put it in the liability. Not we, our client. In this case, it's Balotelli will have to put it in the financial statements. Now, why not C? Because some of you said C. Review the correspondence from the customers claiming. Tell me, as an auditor, are we trained to assess the what do you call it, the evidence from the customer? This one, are we trained to analyze from the correspondences if the customers will claim money or not? Are we trained to do that? No, that's the job of the lawyers and the policemen to do, correct? Okay? So that is not a proof that will tell us if they were going to charge us or not. Okay? What will happen to the case? Okay? Because it has something to do with the court and all that. It says litigation means that it's already in the court. Okay? It's in the court. And of course, the board can say anything. Okay? The board can say, no, they're not going to claim from us, but they still claim. Okay? So the last one is not. Do you understand now? Yes. So the answer to that is letter B. Okay? So remember, we are not an expert to know if we are going to be charged or not. Okay? Now, so where does the auditor get their evidences? Okay? Now, sometimes the evidence is by an expert of the management. Okay? In other words, the company hired an expert to do valuation. That's fine. Okay? Or it's something that the company prepared. Or it can be evidence prepared by the auditor, such as the bank reconciliation. Or sometimes the auditor prepares an aging of receivables, correct? Okay? So, those are evidences that are auditor generated. What's this? Information from prior audits, especially if they are previous clients. Okay? Evidences from third parties. The bank. The lawyer is a third party. You understand? Okay? The supplier is a third party. Alright, so we'll take a look at the first two information sources in detail. Information prepared by a management expert. Who is that? Okay. A management expert, okay, is somebody who's expert in other fields, such as valuation of property, for example, okay, or an expert on valuation of inventory. All right. So it could be that. Right. So the company, our client, has used it to help them prepare the financial statement. So, for example, companies hire people to actually give valuation on properties, especially if they have investments. Because remember, when you put in the value in the financial statement, it could be based on fair market value, right? Or some companies, they revalue their buildings and their property every 3 years. So that is done by an actual company who does valuation. Now, okay? So here are some experts. Lawyers and experts. The one who does property valuation is called a surveyor. Okay? The one who helps calculate pensions is called an actuary. Okay? So there is such a person who is expert in calculating pensions and investment results. Okay? Now, if the information is produced by a management expert and we want to use it as an evidence, do we just get the paper and say, thank you very much? There is something we must do. And what is it that we must do? We want to know this expert. Let me explain to you. Remember, we are supposed to be the one to get the evidence, correct? Yes? So, if we're going to use somebody else's work, we need to check who they are. Because we have checked who we are. Remember, before we did the audit, what did we do? We checked if we were independent, correct? You remember that? We checked if we are properly registered as an ACCA in the KIPA, correct? We check if we have proper knowledge, remember? Okay, we have are we competent? You remember our ethical guidelines? Yes, we are competent, we are ready, we are prepared. The same thing you're going to do. We need to find out, this person who prepared this document, is he independent? Is he competent in his job? In his job. If it's a surveyor, then we have to find out, is this company somebody who is known in the industry? Are they competent? Are they objective? In other words, this surveyor, is he the cousin of the CEO? You understand? So the same thing as we are independent, he has to be independent because remember, I'm using his work. So I need to make sure that he also is independent. You got it? Because if I'm going to use his work and he's not independent, it's as if I am not independent. You got it? The same rules apply to me, applies to him. Okay? Because I'm going to use his work. Okay? Of course, we will not become experts, but we have to have an understanding of what he has done to see if it's actually something that is reliable. Okay? Right? And of course, is it appropriate, okay, as an audit evidence? Right? So is it relevant? Is it reliable? Okay? So remember this, we need to be able to do this before we accept their work as an audit evidence. Yun? That's clear? Alright. So, what was the other one? So this is information that is produced by a management expert. In other words, who hired this expert? The audit firm or the client? So this is the client who hired this person, huh? Okay? And we are using their work. Alright, information produced by the entity. Okay? So, what does it mean? During the course of the audit, the auditors put together some information. Okay? Now, they must make sure that whatever information that we put together is accurate and complete. Okay? So, the persons, so the auditors in your team must make sure that they are, whatever they prepare is accurate and complete. If it's a bank reconciliation they have to redo, it's complete. If it's aging they have to do, it's complete and it's accurate. Okay? And it's important that the senior member of your engagement team must sign and review and sign that which is prepared by the staff. Okay? All right. Now, in the exam, you will be asked to explain what a management expert is. You may be asked to provide an example. But what is more important is you will ask what are the things you would consider before you use the work of the expert. So, do you remember what they are? What did we say? Yeah, so first, remember, so first and foremost, the examples are what? Can be this one, right? Yes? Any of these can be examples of work that can be used by auditors. These are management experts that are hired, okay, by the company. But this is very important. These are the things you need to do before you rely on the work of a management expert. Okay? So this is the more question that came out. So I need you to make sure you remember that. If I'm going to use the work of an expert that is hired by my client, I need to do this first. Alright? So that is our exam tip for today. So here. Alright, can you tell me, can you read the information here? Because I want you to tell me what are the factors you would consider before you rely on the work of the independent valuer. Okay? Now, when you're asked that, make sure you answer using the scenario. You understand? You have to mention the name of your client, who did they hire, you understand? And what is it asking you? Factors that you would consider before you use the work of that valuer. Can you read it? And I need you to write. Okay? Write your answer. Right? Can you try it? Write me about 5 sentences of what you think we should do before. Who is the auditor? Rossi and Company is the auditor. His client is what? The client is Vieri Motor Cars. Vieri Motor Cars hired a what? External independent valuer, correct? Yeah. So what should we do before we accept the work of this independent valuer? Not we, huh? What should Rossi and Company do? Yes, which means in your answer, you have to mention Rossi and Company because they're the auditors.
you done writing? You didn't write. Okay, some of you did. I saw you do it. Okay. Why am I asking you to write? So that you will remember it. Okay. Okay. So let's take a look. So the first thing you would do is what? You would look at, okay, if the valuer is having the what? Okay, so it's a lot here, but I'm going to send it to you. But the first thing, what was the first thing they asked to be done? Number one is talking about capabilities. Sorry, maybe I just highlighted. Okay. What did they look at? Yeah, so in your answer, you must state that you would look at the competence and capability of the experts. Okay? How? Do you want them? Are they a member of any professional body? Or are they associated with an industry? Or are they well known for their job? Okay? The next one, the next part, so here, the first one, you look at their competence. You have to look at also what? If they are what? If they are in the independent, correct? That was the second one we talked about, right? So they must be also, why? You want to check if they're independent, otherwise it will be a threat. Okay? A threat because it will be a self-interest threat. So you cannot use their evidence, okay, their work. And of course, the last part, and then here it talks about how. How would you get those information? You actually get to talk to them. Okay, aside from checking the industry, because you want to know, you remember it says, you have to, as an auditor, you need to understand their work, right? That was the second thing. Understand their work. How do you understand their work? Talk to them. Okay? Talk to them. Do they know what they're talking about? And ask them questions. Okay? Especially, okay, they have to know something about property, plant, and equipment as it relates to the IFRS. Okay? Right? And what else? What else would you do? Okay? You would actually look at the accuracy of their work. Okay? Should be look at their work. What assumptions did they do? Okay? Right? Now remember, how often do they do the evaluation? So can you compare it? Compare how they done their evaluation from year to year. So you have a feeling of what they actually do. Okay? So so we need to practice answering such a question like this as well. But the key ingredients, alright, is that you need, if you see the answers, it makes reference to the client, Vieri, okay? It makes reference to the name of the auditor, what the auditor should do. Now, in the first part of this answer, it says the IFRS. You see this? Sorry, the ISA. You see this, the ISA? Don't worry, you don't have to do that. Okay? You don't have to state ISA 500. No need for that. You understand? That it's only here because it allows us to study it, right? To know where it's coming from. But you don't have to write that in the exam. Okay? You're not expected to memorize the ISA numbers. Alright, clear? So that is an example there. So we'll try and see if we have more examples later. So, okay. Alright, so before we go for a break, let's look at how will they ask questions about what would be considered a good audit evidence. Okay? Normally, they will not ask you to explain what is a good audit evidence. You understand? Okay? But they will actually be more likely asking you
evidences pertaining to accounts or transactions. Okay, so right, so maybe they will ask you in the multiple choice, but they will not ask you in the section B that has all the explanation. Okay, in section B they will ask you what kind of evidence you're going to get against an account, against an assertion, right? Like the ones we explained earlier. So, right, when we come back from the break, we start talking about this financial statement assertions. You remember? I started talking about that earlier. So take a break. You need a break. We came from your offices, right? So we will see each other at what time? 6, oh, sorry, not 6. 7:40. Okay, 7:40. Is that okay? All right. Okay. See you in a few minutes. Welcome back, everybody. Alright. What did I tell you what assertion was? Remember earlier I told you something about assertion? Means what? To assert means to tell, to say, correct? In other words, when companies present their financial statements, now you know how a financial statement look like, isn't it? I assume, huh? Have you seen one? You should see one. You have seen one already, by now, huh? Okay, so, alright, so it says, we have a format, correct? Okay. But aside from assets, liabilities, capital, is that what you saw, what you see? The financial statement also tell us something. When the company, okay, when the company presents the financial statements, okay, when they put all the assets and liabilities, they also tell us something, okay? They tell us, okay, right? It's what the managers are telling us about the finances of the company. It can be explicit. What is explicit? It's written there, right? It's explicit. What is written there? It says, these are the assets. These are the amounts. Explicit. But there's also implicit. In other words, they imply. Okay? And these are what we're going to talk about now. What do they mean by saying 2 million cash? Okay? What do they mean when they say receivables of 45 million? What does that mean? Okay? Right? Now, we have to know the assertion because if our evidence, okay, if our evidence shows different from what the financial statements are saying, it means there is a misstatement. In other words, misstatement is not just that it is short by 30,000 or more by 30,000. There are other things. You remember earlier the motor vehicle example we had? Yes? 3 cars, 2 trucks, correct? And we said we have to prove ownership. And ownership is one of the assertions. What if, one of those cars, when you check the registration, it's not in the name of ABC company. Okay? So which means, the financial statement as for the motor vehicles is what? Is it stated correctly or is it misstated? It's misstated. You understand? Because your proof does not show ownership. You understand? And it's in the financial statement. They put there 3 cars, 2 vehicles, but one of them is not belonging to ABC. So therefore, that financial statement of 2 million as motor vehicles is misstated. Got that? Because one of them should not be there. So now we need to know the assertions because, okay, every transaction. Remember what did I tell you? Transaction in events. Where do you find it? Is in the profit and loss statement. Is in the income statement. There are assertions in the account balances, which is in the balance sheet, correct? Yes, and the third, what did I tell you the third? Is also the disclosure. Where do you find these disclosures? In the notes to the financial statements. Okay? Is that correct? Is the notes having disclosures on anything in the profit and loss and in the balance sheet? Yes. Okay, so, alright, so we need to use assertions to see if what is in here are not misstated. Okay, so here are our assertions. Okay, so let's take a look at the items in the income statement. Okay, One of the assertions is called occurrence. What does occurrence mean? Occur. It happened, correct? So tell me, give me an account in the profit and loss. What? Give me one. What do you find in it? Purchase. Purchase, do you find it in the profit and loss? Yes, you can find it in the cost of goods sold, correct? Which means, if you have purchases, and the amount is there, it means it has occurred. You understand? It had happened. So, you really purchased something. Now, is it possible that you have purchases there, but there was no purchase? Means there's a journal entry, but really there is no purchase. Can that happen? Yes, if you're trying to falsify your documents, correct? How about sales? Sales is the profit and loss, correct? Yes? So if you say that sales is 5 million, means you sold worth 5 million. Means it has occurred. Now, when you found the evidence, and you found that 500,000 of that sales was not shipped at the end of the period, but was shipped in January the following year. Tell me, did it occur? It occurred, but in January. You understand? So it occurred, but it did not occur on your balance sheet or profit and loss year, correct? You understand? So which means the 5 million is what? Is overstated, correct? Which means it's misstated. Okay? So now you have to find proof that the 500,000 actually was shipped in Jan. So how do you find the proof? What do you do? Yeah, so you need to look at the stock movement. Which document will prove to you when the item was shipped out? Delivery note or dispatch note. Somebody said dispatch note, yes? And that is your proof. That is your audit evidence. Do you understand? Okay? So that is your audit evidence. Or, you can get a confirmation from the customer. Isn't that? So which one do you like? You have a third-party information, correct? Okay? Because in your third-party information, you will say when they actually received it, right? No, it's not a receivable yet. Because it's not been shipped as of December something. You understand? Okay. So, another assertion when it comes to transactions is completeness. Completeness. In the profit and loss, you have expenses, correct? Question is, if they say payroll, okay, payroll, yes? Personnel expenses, payroll, 2 million. Okay? Is it complete? Means remember, sometimes you pay payroll on the 5th of the next month, correct? Yes? So which means, as of December 31, you don't only record what has been paid, but you need to what? Your client should what? Should accrue. You understand? Because payment is only done in the 5th of the next month. So they have to accrue from what? As of 31st of December. Do you understand? So, okay? So if they did not accrue, is it complete? No. Then it is understated, your expense. You got it now? Yeah? These are assertions. Assertions tell us what the financial statement is saying, and we need to know them because that's how we're going to get proof. These are the evidence. You need to get evidence that it's complete. You have to get evidence that something has occurred. You understand? You have to get evidence that it's accurate. Okay? How? The 5 million in the sales. How do you know that it is accurate? You remember, accuracy is very easy, right? It's a correct total, etc. Right? So when you record, let it go. Is it me or is this code? It's code. We have to switch off something, otherwise our brain becomes frozen. You know, brain freeze. the word brain freeze? My God. When the brain freezes, that's it. That's about it. I don't know which one. Okay, there you are. Let me switch off this one. Okay. Now, accuracy. When you say 5 million sales, yes, means that you recorded the sales correctly as 5 million. Now, how do you think? How can people make a mistake on how much to record under sales? How can they make a mistake in terms of accuracy, do you think? Yes, wrong calculation. So how do you want to get proof then? How? You perform? How do you report? Every invoice you will perform? Give me the correct term. What would you do? Yeah, you detail, right? Which means you take a sample of some of their sales invoices, correct? I'm sure you have it in your mind. You just don't know how to say it. Remember, you cannot check all of the sales invoices to make 5 million, correct? We said that already. So you pick samples of the invoices, correct? And you recalculate, especially the discounts sometimes, correct? Or this quantity multiplied by the sales price, sometimes it's an error, especially if it's manual, correct? Plus, the other thing, calculation of the tax. Because sometimes the prices includes the tax, correct? And the salesperson has to work back the calculation. That's where you have an error. Because your sales should be net of the tax, correct? So you record in your journal the sales is credit sales and credit tax. And that calculation can be not correct. Now, remember, what am I talking about here? I'm talking about accuracy. Okay? So how do you find proof that the 5 million is accurate? You find and check the details. You got it? And you, yes, recalculate. Check the calculations. Right? So, are you having now an idea when we talk about audit evidence, what we're looking for? Okay? So it has something to prove the assertion. The audit evidence must prove the assertion. If it does not prove the assertion, it means it is misstated. You got that? Okay? So still we are in the profit and loss. What else in the profit and loss? Sorry. Is there anything else? Yes. Cut off. Transaction. Example was the sales. Remember? Okay. That is something of a proper cut off story. Okay. Let's say December 31. Okay. The goods have been shipped as of December 31, but the customer did not receive it until January 3 because January 1 and January 2 are holiday. Yes? So, what is that recording? You understand? So, proper cut-off. It has to belong to the correct accounting period. Again, you have to look at documentation here. Okay? Classification. Okay? It must be in the correct account. Okay? It must be correct account. Why? We're talking about profit and loss here. Sometimes it's still in the assets when it's supposed to be an expense already. You understand? Okay. So that is the classification we're looking for. You understand? So then it may mean if it's still in the assets and it's not, especially prepaid expenses, right? Okay. Prepaid expenses, you need to be able to calculate which one remains in prepayment and which one becomes an expense. So again, you need to try and find proof and recalculate. Okay? And that's how you get the evidence. Okay, proper presentation, of course, has something to do with classification in the financial statement and disclosure. Okay? Presentation and disclosure in the notes. Because IFRS requires certain things to be disclosed in the notes. Okay? Especially, for example, in one of your expenses is called bad debt expense, correct? Okay? Now, IFRS requires that. What should be disclosed in the bad debts? What should be in the notes about bad debts? Now remember, bad debts is an estimate, correct? You should write the details of how the estimate has been made, correct? Okay, so things like that. Depreciation. Okay, are we supposed to put something in the notes about depreciation? Yes, life of the asset and depreciation method, any revaluation. You remember revaluation there? Okay, because that will affect the depreciation, right? Okay, so things like that. Okay, now, how about, how about those accounts in the balance sheet? What are the assertions of the accounts in the balance sheet? Number one, existence. Now, I don't have to explain that, isn't it? When the company says that they have cars, it exists. If it says they have cash in bank, it exists. Yes? How do I get proof that the cash in bank exists? Yeah, we have bank statement is one, or confirmation. The bank itself will send us a response. We send a letter to the bank asking confirmation, and they will reply to us. Okay? And of course, the bank statement, which is we can get a copy from the client. You understand? Okay? So it exists. Rights and obligation. We're talking about balance sheet items, huh? So again, rights and obligation, we have the right to collect the receivable. Balance sheet item, right? So it says accounts receivable. We have the right to collect the receivable. Why do we have the right to collect? Why do we have the right to collect? Because we ship the goods, correct? You understand? So how do we prove that we have the right to collect? I mean, the client has the right to collect. Okay? There's an invoice and there is a delivery note signed by the customer or the dispatch note, correct? That's your proof. You get it? Okay? Or another proof is, again, the client's customer confirms and accepts that they have a liability to ABC company. Then that is a proof as well that there is a right to collect. Right? How about obligation? Obligation has something to do with what? Liabilities. Okay? We have the company, the client has an obligation to pay the liability. How do we find proof that ABC company has the liability to pay? You have purchase invoice, correct? Or a contract, yeah? There's a contract, or there is an invoice from them that you recorded payable to, right? Okay. Or a contract to support an accrual. You have a contract with a cleaning company that they will come and clean your office, right? But the invoice has not come yet, so you need to accrue as of December 31. You got it? Yes? Okay? Oh, account balances, completeness. If it says assets, which means make sure that all the assets are recorded. Yes? It says office furniture and equipment, 1 million, which means that 1 million is everything. Right? So now you have to get proof that whatever they own as office equipment is in that financial statement. How do you get proof? How do you get proof? Yeah, remember, what I want to know is if all of the office equipment is in that 1 million. Tell me, how do I get proof that they accounted for everything? What do you do?
Take the 7 days.
So the list, so he says take the list and then think that thing. Barcode. Oh, okay. Barcode. Barcode of the what? Okay. So which means I go to physically look at asset, right? If you're saying I need to look at asset, right? So ideally, I would take all the office equipment one by one and I'm going to check code number. Is it in the list? Because this list is 1 million, correct? Alright, but of course you're doing this because you cannot do all, right? So you again take some samples to check if and then get a reasonable, right? So that is checking for completeness. That my list that says total 1 million, which is 1 million in the balance sheet, is all of what is office equipment is in here. So how do I check? I need to check. But I cannot check everything. So I get a sample of those, right? Completeness. But if I want to check existence of the office equipment, where do I start? Do I start now from the asset like earlier? It's the opposite. You understand what I just said? I'm trying, there are two things here. And I'm talking about the same office equipment. Okay. Here in the completeness, we said, I will check the asset and see if it's in the listing of 1 million. So to make sure that this list is complete. Now, existence. I have a list that says 1 million. Nice. I want to prove existence because it's in the list. So if it's in the list, there must be an asset, right? So where do I start? From the asset to the list? No, that's completeness, right? So from this list, do I take all? No, again, I take sample, right? So it says, black chair. How many black chair? Okay, black chair. You got it? From the list to the asset. What am I trying to prove? I'm trying to prove this thing that they say 1 million, does that exist? You got it now? Yes? I'm talking about the same asset, But the way to get the evidence, okay, you have to follow what you're trying to prove. So if you're proving existence, means I have a list, I need to know. They put 1 million, is it existing? How did I check existence of the bank balances? I get the bank confirmation, correct? You understand? Okay. Right? How do I know it's complete? All of the bank amounts are there. How do I know that they did not put one bank account? Some companies have many bank accounts, correct? How? Can somebody tell me? How do I know that all of the bank accounts is in the balance sheet? But if it's not in the balance sheet, how do I send the bank confirmation? Yes.
Probably about 20%.
Correct. Because you get 20 bank accounts. Yeah, they get that. Correct. But you know, one document that we need to get is the board resolution. Why? Why do I need to get a copy of the board to read all the board resolution? Because the one who authorizes the opening of a bank account is not the CEO, is not the finance manager, it's the BOD, the board of directors. And they have to issue a resolution for that. You understand? So you will know how many bank accounts they have authorized to open. You got it? Okay. And of course, not only that, in each account, in each bank, when you get the bank confirmation, they will tell you everything that is existing in the bank under the company name. But of course, how many banks? You have to get the board resolution because we need to know how many banks. they have opened. You got that? So, things that we're talking about here. Okay, so existence, rights and obligation, completeness. Oh, accuracy, valuation and allocation. Okay, it says assets, liabilities, equity have all been recorded and it's in the correct valuation and it is accurate. Right? So cash. Cash, accurate until to the last cent. Correct? Accuracy. Valuation of property, plant, and equipment. As per IFRS, how should these assets be recorded in the financial statement? Assets. Property, plant, and equipment. It's the what? Historical cost convention, correct? Which means what? Whatever is the cost minus accumulated depreciation. So when you're asked to look at allocation and valuation, let's say the asset, number one, correct valuation. The cost is as per the purchase cost, correct? Right? Now, allocation means that the accumulated depreciation is correctly calculated. You got it? Yes? And how do you get proof? How do you get proof? First, you need to look at if it's purchased this year, you can look at the purchase invoice. And then, what do you do with the depreciation? Yeah, you perform or you recalculate, right? Okay, the sample of what is in the register. Okay, because even the shares and are depreciated too, correct? All right, so that's assets. Liabilities. Do you make sure that it's correctly valued and accurate? That is why you also check the calculation of accruals, correct? You recalculate. Very good. Okay, now you understand. All right. So we see examples here. And proper disclosures, of course. Again, correct classification, correct presentation. Let me talk to you about classification. Liabilities. Okay? Liabilities must be correctly stated between current and long term. Yes, non-current. So again, you need to find proof. How do you know what of the loan is current and what of the loan is non-current? So you need to perform procedures to actually get your audit evidences. Okay? Because if it's not properly classified, it is misstated. You understand what I just said? Huh? So anything that disproves the assertion is a misstatement. Okay? It's a misstatement. Alright, so financial statement assertions. Again, we find this saying is a key syllabus area, which means we need to understand them very well so that we will know how to apply the audit procedure for that particular assertion. And I showed you an example, I told you an example earlier, correct? It must be relevant, your audit evidence must be relevant to the assertion. Okay? And how do you get the audit evidence? We saw some examples. You said to me, recalculate. You said to me, send confirmation. You said to me, search for details, correct? Okay? You said to me, inspect the registration. So these are the procedures that you said to me, from asset to the list. From the list, check the assets. Yes? So, those are procedures that are important because these procedures must relate to the assertion that you're trying to prove. Okay? Now, you probably will get an audit question on each exam. Not probably. It's not just probably, it is always appearing there. Right? Because this is the core knowledge that you should have. How to be able to get evidences to prove an assertion. Okay? So, these are always, we always we have it there. Okay, now, alright, so remember, what makes a good evidence? A good evidence is one that answers an assertion. A good evidence is reliable. A good evidence is relevant. Relevant because it matches the assertion. Okay? A good evidence is sufficient. You got it? Okay? So, the question is, how? Okay, so we already discussed some of the how, right? So before we go to the how, I need to say, well, how do I remember all those assertions? Okay? I will tell you a secret. I will tell you a secret, and it's only between the two of us. You know what I mean? You and me together. Okay? How do I remember that? Give you a way to remember. I hope you remember the words though. Okay, so bless you. It's too small. Make it small so you can see. Can you see now? Yes, everybody can see, right? So what do you think is the C? What do you think it is? Sorry. What is the C? Okay, completeness. Yes? E. Existence. Or, existence is in the balance sheet, right? Or it can be what? What do you think is in the yes? It exists in the balance sheet, but in the profit and loss, it has occurred, right? What do you think A is? Yes, A is accuracy. How about V? Valuation. Don't forget, when I say valuation, it also comes with allocation. The allocation is when you calculate correctly the accumulated depreciation, allowance for bad debts, you understand? Okay. Or impairment in terms of intangibles. Yes? O, okay. Obligation. Sorry, no, wait. Because we forgot something. Ownership or rights and obligation. P, presentation, and presentation always comes with what? And disclosure. I have something that I forget. Completeness and there's one word we have, it's not there. What is it? Also C. Cut off. Yes? Because if it's not in the correct accounting year, it's incomplete. Isn't it? You understand? Like the sales. If it's not in the year that it's supposed to have been shipped, then your sales is, okay, it's not in the correct cutoff, then it's not going to be complete. Yes?
So you must be able to remember that. Alright? So those are what we call these? These are called? Yes, these are called financial statement assertion. Assertions. Okay, guys? Now we go to the how. How do we find proof for this? Okay? How do we find the proof for this? So can I go back now? Yes, that? Okay. Alright, so it's called, when you find proof to actually prove the assertion, okay? The procedures is called the audit procedure, or it's called the substantive tests. Okay? Now, how do we get them? Now, you understand that there are tests. There is the substantive tests, and there is the test of controls. So you will hear the word test of controls, substantive procedure, sometimes it's called substantive tests. Okay? Now, the difference between these two tests, what do you think are the difference between these two tests? Okay? You remember, we heard these words before. Okay? The difference between them is that the test of controls, in other words, the difference is in the purpose. What is the purpose of a test of control? The purpose of the test of control is to find out what? Yes, if the internal controls are actually working effectively. So how do we know it's working effectively? What does internal control supposed to do? Internal control is supposed to do to prevent, detect, correct any misstatements in the transactions, correct? Okay. That is the purpose of the internal control. A test of control is a procedure done to test if the controls work. Okay, if the internal controls work. Now, I'm going to talk about internal controls in the next chapter, which is chapter 9. Okay, and the tests, we'll talk about it in chapter 10. Okay, that is where we're going to talk about these tests. Alright? The substantive test, on the other hand, my computer is not working. Okay. Again, the purpose of the substantive tests, okay, is to what? What does it say? Detect material misstatements on the what? What does it say? On the assertion. So if the assertion says existence and it does not exist, you understand? It's misstated. So the thing is, how do you find? The substantive test is to find if the items actually exist. Okay? So the procedure is for you to do to detect any material misstatement of the assertion. Whether the assertion is on the profit and loss items or in the balance sheet items, or it's not properly disclosed in the financial statements. Okay? Right? So, what does it say here? Substantive procedure must always be carried out. In other words, even if they have the perfect internal control, which means in reality there's no perfect internal control, right?
Okay? But even if they have a very good internal control, it does not mean you don't do substantive tests. You understand? Okay? So, it may reduce your substantive procedures, but you need still to do substantive tests. You understand? You don't have to do the back reconciliation, the confirmation, everything. Back reconciliation can be enough. You understand? If their internal controls are working or are effectively working. You understand? Alright. So, a simple question like this. Okay? Right? You are to define a test of control and define a substantive procedure. Yes? Now, what are both of them? Both of them are audit procedures, correct? Yes? What makes the difference between the two of them? The test of control, the purpose is what? Our audit procedures to test if the internal controls are effective, okay, or are working or are effective, correct? Okay, which means effective means it does what? It prevents, detects, corrects. So first thing, how do I remember those words? First thing, whenever you want to prevent a misstatement, correct? So the first thing is supposed to prevent, right? So if it cannot prevent, it should be able to what? To detect. You understand? Okay, so remember this, huh? It's easy to remember. When you put an internal control, you want to prevent something bad to happen, correct? But if it does not prevent, because it's not perfect, it should be able to what? To detect if something is wrong. You understand? And when it detects it, once they know what's happening, the control should be able to do what? What's the third word? Correct. You understand? So, prevent first. If it cannot be prevented, detect it. Detect the misstatement. And if they detect the misstatement, it can be easily what? Corrected. That is what the internal control should do. Okay? So if it cannot, it should be preventing misstatement, detecting, and correcting. Those are the three things that internal controls. And that's what you do with test of controls. You want to test if their controls are effective. And when you say effective, it means that it does these three things. Okay? Prevent, detect, correct any material misstatement. Easy to remember. Yes? So, substantive tests are audit procedures that what does it do? Detect what? Okay, there's no prevent here. It's already in the detect. Yeah? To detect material misstatements on the what? On the assertions. Whether it is an assertion in the class of transaction, which is in the profit and loss account, or account balances, which is in the balance sheets, and the disclosures and presentation. Yes? So I'm sure you will not forget that. It's worth 2 marks. Okay? So if you have that answer in your mind and that question can come out, takes you only 2 minutes to answer this. So you say, but it's only 2 marks. Yes. It is 48 plus 2 is 50. You understand? So it's something that is easy, and these are called easy marks. You understand? And there are many easy marks in the question, in the exam. So imagine 2 of these, 3 of that, 2 of these, 3 of that makes 10. You understand? And 10 plus 40 is 50. Voila! You are passing the exam. You understand? So these easy marks are also important. Yes? You understand? Don't disregard them, because they sometimes will save your life. Okay? These easy marks. Okay? Alright? Of course, we want the big marks too, but it's important to have the easy marks. Okay? Anyway, this is exactly what we talked about earlier. Okay? So, alright! What are these ways? Okay, we can inspect, we can observe, yeah, we can inquire, means ask, okay? We can send confirmation, like the bank, send a letter to confirm to us, or send to the client's customer, yes, okay? Or you always told me earlier, recalculate, I'm sure you know what it means, okay? Reperform, okay, could be a procedure that you need to reperform something to do. Like for example, if you're doing observing a inventory count, correct? And you're unsure, you want to count yourself. So you perform the process, correct? Okay? So that's reperformance. In analytical procedure are comparisons of financial to non-financial, or financial to financial information, or financial to different years. So it's a way to actually also get proof, for example, that how do I know, for example, that their sales is complete? Can I do analytical procedure? If it's a company that is not volatile, what is volatile? Volatile means keep changing, correct? 1 year is good, the next year is bad. Yeah, these people who sell gaming app, right? If it's good if the people like your game, but then you release the game, but then they didn't like it, so your sales are down, correct? So some years are good, some years are bad. Now in those years, can I compare sales year 1, year 2, year 3 and see if there's growth? I cannot do that because it's volatile. But if you have a company that sells regularly, it's like their sales are more regular. You understand? Okay. So which means I know, for example, let's say rice. People buy rice, correct? Okay. So every year they buy rice. So if in the past the sales are increasing 5% every year. One way for me to actually measure if all of the sales have been recorded completely, what do? I check last year plus 5%. Is it the same in the financial statement this year? You understand? So it gives me a trend. You understand? So that is an analytical procedure. But of course, an analytical procedure should be followed up by another evidence. Do you understand? It's only an indicator. Okay? So, alright, so how do I remember this? Okay? So we're going to look at some of the examples. I will give you how to remember it later on. Let's discuss first one by one. So examples, inspection. Okay? Right, so you inspect two things. You can either inspect an asset or inspect a document. So when you look at the registration of the motor vehicle, you inspected the records, correct? When you looked from the list to the asset, you inspected the assets. You understand? Okay? So, inspection can be inspection of an asset or inspection of a document. For example, you remember the sales invoices that you said you need to look, it's calculated correctly? So you have to inspect the sales invoices also. So that is actually inspecting a document. Yeah? Right. Right? Inspecting tangible assets. Okay? Right? So this is what we said earlier. Inspecting tangible assets that are recorded confirms existence. You remember what is it saying? That sentence is what we said earlier. You have a list. What do? You check from the list and check if it exists. Correct? So, you're inspecting the assets from an accounting record. Okay? But that is not a proof for rights, obligation, or valuation. It only proves existence. Okay? So if it's asking you to actually get an evidence for the correct valuation of the asset, do not give inspection of asset. You will not get a point. Yes? Okay? Confirmation that assets that you see are recorded are an evidence of completeness. And this is what we said earlier, correct? Yeah. Now, okay, we did that already. We can jump that. We're advanced than you. Okay. Inspection of documents or records. Okay. Can be both internal records and external. So that's why, for example, you can get evidence on documents within the company or sometimes external documents. Okay. So from the bank or something like that. Okay. Okay. Sometimes it can provide evidence of existence but not necessarily ownership or valuation. So depending on what you are inspecting. Okay. So be very careful. Observation involves the act of watching, okay, something being done. Okay? So, right, so observe a process or a procedure. Okay? Now, one type of observation is what observing the staff carrying out the inventory count. That is an observation. Okay? And provide evidence that they are counting according to the instructions. They are counting and doing the count correctly. Okay. Inquiry. Another spelling of inquiry sometimes is with an E. Yes? Depends if you're American or you're British. Yes? The British will spell it with a what? With an E. The Americans will spell it with an I. Okay? Asking for information from the clients or external sources. Okay? Can be also an inquiry. Like asking the lawyers was an inquiry. You remember our example earlier about Barotelli who had food poisoning? Okay? Remember, the strength of the evidence depends upon the integrity of the source of your information. Okay? So if you're asking about some information in the company, and you're asking the secretary, because she's beautiful, right? Okay? Will that evidence be valid? Yeah, without disrespect to the secretary, but the secretary will not know anything about the debit and credit in accounting, isn't it? Yes? Okay. She might know what her job is, but it's not related to our financial statements that we're auditing. Okay? Alright? Now, asking verbally and getting a verbal answer is not enough as an evidence, correct? The inquiry, the asking the question, is supposed to point you to the direction where you need to get further evidence. Do you understand? Okay? So an inquiry in itself may not be sufficient. So you may need to get and do another procedure. Okay? Right? So, question like, how did the management assume how many percent is the bad debt? Why did the management assume that a particular accounts receivable, even if it's 3 months delayed, is still collectible? You understand? How do they assume, for example, that, or how do they treat obsolete inventory? Okay, so things like that, you need to inquire. Of course, confirmation, we've been talking about it. Alright, so an example is confirming receivables from the client's customer or the confirmation from the bank. To recalculate is to check mathematical accuracy. Okay. If there are many transactions, we can use computer-aided software to help us recalculate. Okay. Am I too fast? No? Slow down? Sorry, where do we want to stop? Because I'm looking how you feel the chicken out. Where do you want me to go back? Okay, sorry. Yes, question. One is there writing, then let's talk to each other.
Yes, you said all except
Okay. No. Wait. Oh, yeah.
Yes, I got a slide by let's see.
Oh, you didn't try it, huh? You were looking at me, huh? Thank you very much. Yeah, okay, no problem. Maybe you're looking at me, huh? Yeah, you're all right, and we're not looking at me, so you cannot lie. I agree, yeah. Thank you, thank you. I was said to you specifically because you're the one looking at me. Okay, yes, I will. I'll get it posted in the. Okay. But of course, you can. Those who are writing, it's good to write it. Making sure you're awake. All right. Can I change the slide?
Yes.
Okay. Next one. How about this? Done. This one. Okay. Okay. Next one. How about this one? Wait. Okay. So we talk again. Okay. The right. Okay, done? Yeah, okay, good. You're not telling me, huh? How about here? You're okay with this one? Yes? Okay, I didn't have enough here, right? Reperformance. Okay, so reperformance. Who reperform? Who actually does the reperformance? It doesn't work. They do something again, yeah? They repeat. Okay? They repeat. Okay? What is part of an internal control that we repeat? Bank reconciliation is actually an internal control, correct? But sometimes we repeat. We do it again. Because we don't trust the way. So sometimes we have a different way of calculating bank reconciliation. Bank to book, book to bank, correct? But what we want is the adjusted method, for example. So we have to redo it. Aging of receivable. Okay? Maybe you don't trust the way that they do the aging, so you have to do it again. Okay? Yeah. Bank reconciliation, aging. Yes? Okay, this is okay? Alright. And of course, analytical procedure. Now remember, we've seen analytical procedure not only here. Where did we see analytical procedure? Have you seen this before? Yes? When? At the beginning. When we were trying to understand the client. You already make an analysis. This company is increasing. No, this company is decreasing sales. You understand? You already make an assumption, a comparison of their information. So you can see and understand where, what kind of business they are, what are the risks in their different accounts. You understand? Okay. Okay, so it tells you relationships. So you can see, by the way, you will see all analytical procedure again at the end, before you finally make your opinion. Again! Companies will do analytical calculation, calculating gross profit margin, looking at net profit margin. They will make comparisons to make sure that the financial statements are in line. Okay? Right? So, alright, analytical procedure can compare. There's two ways to analyze. Vertically or horizontally. What does it mean? Vertically means you compare this year against last year, against the previous year, against the previous year. Or vertically, you compare your information within the year. In other words, I'll compare my gross profit with my sales. I compare my receivables with my sales. You understand? I compare, the related ones, I will compare payables with my purchases. Correct. You understand? Okay. So you do that comparison, okay? Alright, so that is analytical procedure. Now, this is the first time I've seen the word imperative. What it means imperative? Means a must. Okay? This is not a suggestion. It is a must that you understand the difference between tests of controls and we don't have a problem with that, isn't it? Okay, even if you are sleeping, you can tell me the difference between test of controls and substantive tests. I'm sure you will dream about that tonight. Okay? Now, alright, so you will be tested about this, okay? And you need to look at past exam questions to give you an idea of what evidence proves an assertion. You understand? Okay? So you need to look at that so you can see how they ask the questions and how they respond to the question. Okay? So what assertions, what procedures answers to a particular assertion. Okay? So look, an example in June 2012, it says, identify and explain 4 financial statement assertions, okay, related to account balances. Identify and explain. Don't look at your notes. Earlier, we list down, correct? Now think. Now remember my SEA VOP. SEA VOP CO. Remember that? Yes? Now, give me 4 of those that pertains to account balances. Where is the account balances? Balance sheet. You said, actually, give me 4. Completeness. Is it completeness there? Yes. Existence. Okay. 2 more. Okay. Accuracy, valuation, correct? And allocation. Accuracy, valuation, and allocation. And 1 more. Balance sheet. In the balance sheet. Occurrence is not in the balance sheet. Existence already said. Ownership. Ownership. You understand? And that is identifying. Then you need to explain what it means, correct? You got it now? You understand? Okay. So how many marks? Oh, it doesn't say. 8 marks. So 1, 2, 3, 4. And then for each of the 4, you have to describe a substantive procedure when it comes to inventory. Do you understand? Now, occurrence is an assertion, but it's not in the account balance. Where is occurrence? Occurrence is in the class of transactions. In other words, in the profit and loss. You understand? Okay. So you remember the chart earlier? Okay. Which are the assertions under transactions? So that's the one you need to remember. That is the one they're trying to ask you, but they're asking only for 4. Okay. So and then you're supposed to give a substantive procedure for all the 4. Okay? So which one was the first one you told me? Completeness. So how do you prove completeness in the inventory? How?
The actual count.
Yeah, actually, remember the completeness is from the asset to the inventory, correct? And that is actually solved by the inventory count. Yes, the observation of the inventory count, correct? How about existence? The same thing in the inventory count. Actually, the inventory count answers many Can one procedure answer many? Yes. For example, observing the inventory count. When we go to inventory, we will talk about what actually happens when you observe. You just don't go observe there. There is a procedure you have to follow. There are things you need to check. You understand? Until the count is done. It's not a holiday for you, huh? There's a job you have. when I was an auditor, the inventory count is my favorite part. Because it's the only time I go out of the office. Because I was the accountant, right? So when you do inventory count, you have to organize things, right? Oh, I'm so happy because I'm active outside. I go to the warehouse, yeah. Otherwise, in the morning, I go to the clock in. When I go to my office, I sit on my desk. I stand up, have lunch, and sit down again after lunch. And then I go home. That's it. That's the life. So boring, eh? So when it comes to inventory count, I am so happy. Okay, but of course you have some things to do. You have, as an auditor now, you have the system to follow to complete, because it answers what? Completeness. That is a proof for existence. By the way, it's also a proof for correct valuation. Why? Because when you have inventory count, they adjust for obsolete items, deteriorated items. You understand? So you actually have the correct valuation of your inventory. So yes, there are procedures that answers more than one assertion. You understand? Okay. So yes. Okay. Alright, so remember, it asks you for account balances. So don't answer occurrence because it does not refer to account balances. You saw the chart? Yes. Okay, that's good. That's good. Okay. So, you get 1 mark for identifying, 1 mark for the explanation, and 1 mark, or it can be 1 mark for identifying and explanation, and 1 mark for the substantive test, correct? So how many marks is it? It's 8 marks, correct? Okay, so 4 marks for identifying and explaining the 4, and 4 marks for the substantive tests. Okay. So, this is your assertion, okay, and this is your procedure. So, this is your assertion, and this is your explanation, okay. How do you test? How do you make sure that there is an existence? You take a sample of the inventory and test it to the physical item. Now, you do this if you did not go to you're not able to observe the count. Correct? But sometimes you have been hired after the period ends. Okay, so you were not there during the physical count. Rights and obligations, we said. The entity holds and controls the right to either the assets and liabilities. Because remember, it's talking about the balance sheet, right? So, what happens? How do you test inventory that is belonging to the company? So, for any third-party inventory that is being held for other companies, should it be included in the count or should not be included in the inventory? Should not, because it belongs to another company. Can that happen? Yes, because sometimes some companies consign goods to you, correct? What does consignment means? Physically the goods is with you to sell, correct? But the ownership is not transferred to you yet unless you sell it, correct? So at the time when the company makes a count, they should not include those that are not belonging to the company. Okay? So how do you test? You must make sure the company knows which one does not belong to them and must check, okay, to whom those items belong. Okay? Don't worry, I'll put it in the Google Classroom, huh? Or do you want to write? So you're tired already, huh? Okay, just the last one, huh? Just the last one. So 1, 2, 3, 4. Completeness and valuation. Okay? So you see how to answer, huh? Identify and explain. Which means, you remember those words? Completeness, the same above. Remember those words. You remember those words. The examiner will look for the word completeness. The examiner will look for the word ownership obligation. Okay? You have to remember them. You cannot use, oh, what's another term for? You cannot use another term. They're looking for those terminology. You got that? Okay. And practice answering, explaining each one of them. Okay. All right. Good. Okay, so what should you review? Okay. When you look at your revision kits, you need to look and make sure that you will know what procedure matches what assertion. Again, I will repeat. What procedure matches an assertion? Another thing I need you to do, look how they ask the question in the exam. I'm not asking you to memorize the answer. I'm trying to get you to know how does the examiner ask the question, the style. You understand? So you know how to approach the answer. Okay? Right? So, remember those key areas. Alright? Okay, so I will send the answers, but I will put some blanks there, yes. So I need to send you to the Google Class. Okay? Alright. Now, the Indian meeting, I sent it to you. I will also try and send you one more with regards to this. Okay? Assertions and procedures. Okay? So we will start talking about internal controls next. Okay? After the internal controls, then we go account by account. We will go the procedures in cash, procedures in receivables, procedures in inventory. Got that? Okay? Good. So, thank you very much for coming tonight. Even the microphone wants to say goodbye. So, we'll see you on September 15th. Huh? 14. Don't forget, you have homework to do, Okay, good. Bye. Enjoy your evening. Yes. Whatever is left. So 10, 11, 12. Pricing is the same, right? But the thing is that it's cost of the product. And there are yes, but companies can choose to what standard. Yes. Yes. Because then they have to establish a certain price. They say, this is what we need to sell. Okay? But sometimes the actual is not that. Because if you give discounts, your selling price is not the same as the standard price. You understand? So sometimes companies they decide to give 2% discount to attract more customers to buy more. So the actual is different from that. Oh, that's good. Yes. All right, you're welcome. No, tomorrow. You wish, huh? Not tomorrow. Next, the week after. 14.
เนี่ยอาการนี้คือ
ตาไปองค์การก็ออกมาเหมือนเกิดการเปลี่ยนแปลงได้ยิบยิบแบบยิบพอเจนกับออกไปหาไอ้สกัดก่อนเลยเก็บบาดตุ่มรัดทุกที่นะใช่มองในไอ้ข่าวเชิญให้ข่าวเชิญเลยมาที่ซ้ำเลย Bắt chắc đấy. Chắc phải sẽ cắt trâu đi rồi.